はい、皆さん、こんにちは。日本ブロックチェーン協会の藤井と申します。今日はですね、ReFi、web3× サステナビリティ、ReFi、リジェネリティブファイナンスの最新トレンドということで、セミナーにご参加いただきまして、誠にありがとうございます。鈴木さん、聞こえてますよね。ね、はい。で、今日はですね、ここに書いてますけども、ステンバージャークさん、ソリッドワールドダオというですね、リファイの、スタートアップを起業しているファウンダーの方にお越しいただいて、主にですね、今勃興しつつあるグローバルのそのリファイのマーケット、に関する最新動向、それから、ソリッドワールドが、確立しようとしているカーボンのですね、フォワードマーケット、これの、概念という考え方について、シェアをしていただきます。で、その後ですね、パネルセッションということで、私ともう一人、JBA のですね、鈴木さんの方に、入っていただいて、二人で質問する形で、ステンバーさんに、クエスチョンを投げかけるようなセッションを設けたいと思います。で、ちょっと Q&A 取れるかわかんないんですけども、もしご質問とかあればですね、QA の方に書いておいてください。セッション内に拾えなかった場合は、できるだけ、別な形でですね、回答を、ステンバーさんのところにも確認をしてですね、お答えするような形にしたいと思いますので、よろしくお願いします。それからですね、今日ですね、同時通訳を入れております。ステンバーさんのセッションが始まったら、聞きたい言語をですね、選択できるモードに変わりますので、ここで、英語をそのまま聞きたい方は英語を選んでいただいて、日本語で聞きたい方は日本語のチャンネルを選んでいただくという形で、操作をお願いいたします。で、最後にですね、セッション終了後にアンケートの記入が、依頼がございますので、こちらの方のですね、ご協力をぜひよろしくお願いします。じゃあ、大枠さん、モードを変えましょうか。
はい、スタートしました。
もう大丈夫ですか？
はい、スタートしてます。大丈夫です。
はい。じゃあ、大丈夫ですかね。はい。So Stenver, we have changed to the presentation mode right now. So thank you for joining us today. It's really honored to have you with us today. So first of all, please introduce to the Japanese audience about the ReFi market and the service that you have launched. So I will hand over to you. Could you please start your presentation?
Thank you. And thank you for inviting me. I'd like to share the screen, but it says I cannot start sharing while, all right, great. So let me just share the screen. So thank you so much for inviting me. I really appreciate it. I'm honored to be here. My name is Stenver Jerkku, or my nickname is Stenver from Denver, because it's easy to remember. I am the founder and CEO of SolidWorld DAO. My background is that I come from software engineering and also carbon project development. Previous companies I founded, for example, is EY Agronom, where we turned farmers into carbon farmers through regenerative practices. I was the CTO there. Before EY Agronom, I worked in multiple growth startups, for example, Clea, which is a New York-based startup. I was 7th employee over there. Now it's a unicorn in New York. I got into blockchain in 2013, and I also have built software for space satellites. So I'm very much a tech person in the background. And the team I have behind me in the solid world is very seasoned climate or web3 people who have worked for half a decade or more in either solving climate issues or working with carbon and environmental assets, or have built stuff in Web3. So let's then talk about the climate change. Climate change is a very urgent issue. And it's not only an emotional issue for the people, it's also an economic issue. There have been made a lot of agreements, Paris Climate Agreement and Green Deal in European Union, and more of these agreements are coming up where countries are committing to climate targets for cutting their emissions at least 50% by 2013. That's only 7 years away, so that's a very ambitious goal, and becoming net zero by 2050. We need to stay below 1.5 degrees Celsius to avoid economic disaster. In fact, a lot of researchers show that 80% of S&P 1,200 companies are under serious physical risk from climate disasters and climate change. But only 38% of Fortune 500 companies have pledged climate commitments, although that number currently is rising very, very fast. So we're not just talking about uncomfortable lives and some places becoming uninhabitable, we're talking serious economic repercussions. In fact, let me close the presentation for a second. Just before the presentation, just for the fun of it, I used OpenAI, the ChatGPT, to ask, what are the most economically specific climate change facts on Japan? And the first thing it says, Japan is one of the world's most vulnerable countries to the impacts of climate change. It's at risk for extreme weather events like typhoons, floods, and heat waves. And there's a lot of other facts in here as well. I do suggest you go check out and play around with the new OpenAI tooling. But back to the presentation. Sorry for this little side walk. So one of the ways how to stop climate change is companies taking on these net zero commitments. You may have heard Microsoft saying, we're going to go net zero, not only by 2013, but actually all the way throughout the entire history they have existed. How they're doing that is that, first of all, they're trying to reduce their own emissions as much as possible. But after they're done reducing their own emissions, they still have some emissions. It's almost impossible to completely remove your carbon footprint. Very few businesses can do that. So how they fix that issue is that they pay somebody else to do environmentally friendly stuff. For example, grow trees or build machines that suck carbon out of the atmosphere. This is called voluntary carbon market. The voluntary carbon market is also a lot driven by ESG. The companies, some of them have noble goals and they take on net zero goals because they really want it. A lot of companies are actually taking on net zero goals because investors demand it. In fact, PricewaterhouseCoopers survey says 49% of US investors divest from companies which are not ESG aligned and which don't take net zero commitments, etc. So here are some stats about voluntary carbon markets. We currently have had growing supply of voluntary carbon credits the companies can purchase year on year. Last year, Q4, the global supply of carbon rose by 5%. However, there are multiple types of carbon assets. First is paying somebody so they will reduce their emissions because they wouldn't do it otherwise. This is called emission avoidance carbon projects. Second is paying somebody so they would literally suck carbon out of the air by growing new trees or by building machines that remove carbon from the atmosphere. These are called sequestration or removal projects. So what we see is that sequestration supply has been actually reducing 24% last year's Q4, while the removal supply building machines was reduced by 38%. So when we talk about trends in the voluntary carbon market, we can see that people are moving away from emission avoidance. They don't want to pay others to remove their emissions. They believe these companies should do that anyway. They want to pay projects more which suck carbon out from the atmosphere, because that's, literally doing a change. So these are the projects that are in supply squeeze, while emission avoidance supply has been increasing. Another thing to understand in carbon markets is that every project is priced differently. 1 ton of carbon doesn't equal 1 ton of carbon. You can think of them like NFTs, non-fungible tokens. We have renewable energy projects in developing countries, which cost like $2 to $3 per CO2 ton. And then we have machines in Switzerland, where I am right now in Zurich, which literally suck carbon out of the air, costing $1,000 per CO2 ton. So that's over 400x price spread between different carbon credit asset classes. And that supply crunch of sequestration supply going down and removals, emission avoidance supply going up, is reflected in the prices as well. So for example, growing mangroves or doing afforestation and reforestation, these carbon credit prices have been increasing 30 to 40% year on year. Companies are currently investing into these projects as early as they can, so they can get in cheap, because a lot of researchers show that good quality carbon credit prices will reach $100 by 2030, while they're currently for mangroves around 30, for ARR around 25. So this just shows you how the reducing supply crunch has an impact on the prices. People are looking for good projects, but it's really hard to find them. There's not enough people who can actually do quality voluntary carbon projects, and there is a massive demand for these types of projects. So let's just I want you to all understand how voluntary carbon market works for a second. So I'll go through the life cycle of a carbon project in general. First is, when you start the project, it's not easy to do. There's a lot of paperwork you need to go through. There are something called certification bodies or registries. The biggest one is Verra and Gold Standard. They own 75% of the market. You can think of them as auditors of auditors. They essentially should be used to certify a project. Without their certification, the credibility of your project is questionable, and most of these projects eventually become certified that try to do without certification at first. So when you start the project, then there's lots of consultants out there or project aggregators who help you set up the projects and help you do the paperwork. Some of them try to do it in scalable ways, some of them do it manually one by one, depending on the projects. We have a curated list of consultants like South Pole and others who you can use to set up a project. If you want to, feel free to reach out to me and ask that list. I'm happy to share it. But there's also lots of companies which help you do it in a scalable way, like eAgnom, Indigo, Agrina. But the issue is that when you start the project, you plant the trees, for example, then it can take you up to 5 years before you invite the VVP, verified third-party validator, to come on your land, measure the biomass with measuring tape, and then tell you how much carbon you actually sequestered during that time. And so that 5 years is a very long window. Imagine working for 5 years before you get to pay it, because once you certify the credits, you can easily sell them on the spot market. So there is a funding gap over here. How do we get the money from that 5 years to year 0 and help to bootstrap new projects? That funding gap is currently filled by hedge funds, family offices, carbon trading houses. Some of them are our partners and work with us, who do something called forward investment. Microsoft does it directly as well as Google and everybody else. They buy these credits up ahead of time at a discount, and they sell them away for a spread once they get certified. We focus on helping these institutional partners, but I'll get back to that later. Once you certify your carbon project, then you can get, there's lots of spot carbon exchanges. When we talk about blockchains, then like Toucan has done, or Tallow is working on. When we talk about traditional markets, then M-Shirts, CBL, and lots of other exchanges where you can trade spot carbon credits. And a lot of it is, most of it is actually WhatsApp-driven market, people just texting and closing deals. The carbon market financing at this stage still looks like 1500 bartering economy. There's very few advanced financial instruments over there. Once you get that done, and eventually your credit will be bought by a corporate with ESG goals. ESG is then environment, social, governance. These are the net zero goals, basically. And they retire your credit. They basically destroy it. And then they count it as towards their net zero footprint. So I already started going in there, but climate finance is very untransparent and slow right now. It's also very hard for companies to participate in climate financing. In fact, companies hire entire sustainability arms right now, departments of people who are sustainable focused, and they focus on project sourcing, trying to find the right project and then either buying their offsets directly or investing into them directly. So it's a complex market to participate in right now. And a lot of innovation is currently happening to change all of that. Direct investments by the corporates right now are quite risky to do because it's a purely over-the-counter market, or OTC, as we call it. Every deal is done behind closed doors. People are, haggling and negotiating prices for the deals. There's no like exchange where you can just see the price and buy the credits, or those that have very shallow liquidity. So you can basically buy the entire order book very easily. So it's an illiquid, it's kind of risky, and you have high exposure and high management fees as a corporate to currently participate in carbon markets. This is where ReFi comes in, or regenerative finance. So ReFi is a play on the word DeFi, which is decentralized finance. It basically means how to use blockchain for good. How can we do it so when you create blockchain protocols, it has some sort of societal effect? Usually it's environmental causes, like we are doing. We're helping to finance new carbon projects with our protocol. But sometimes it's also social causes, equality, education. There's lots and lots of good people out there who focus on building ReFi projects. There's even a DAO called ReFi DAO, which is a community of founders who are doing ReFi focused projects so they can support, help, and grow each other. It's all about making public goods, basically blockchain assets and protocols that help others. So we have essentially, to solve the climate financing issue, have created diversified carbon financing pools. What this means is that whereas right now corporates are going out there, they're sourcing projects directly, they're spending a lot of time and money finding these projects, and then they're taking on direct risk and exposure of that project. We help to corporates access diversified carbon asset pools. It's de-risked. It's, for example, diversified pool of mangrove projects all over the world, or diversified pool of afforestation, reforestation, restoration projects all over the world. And how it essentially works is that on one hand, we have institutional capital coming in. We're in talks with some of the biggest banks, family offices, hedge funds in the world about that. And they put capital into these pools. And on the other side, there's institutional suppliers, carbon trading houses, family offices, brokers who specialize on finding and selecting the best projects. And they put in the projects into these pools with guaranteed delivery, which means that if a carbon project fails for some reason, let's say the forest burns down, then these institutional partners provide replacement credits, or they're using insurance, which provides replacement credits. One way to think about it is that institutional partners, they actually go out there and source projects directly. They're taking the biggest risk, a junior position, if you will. And then they give guaranteed delivery credits to our diversified carbon pool, which is sort of like a senior position. Another way to think about us is that we're like an ETF, an index fund, sort of, for these carbon financing pools. Though that's a bit technically inaccurate, it just gives you the general idea. It's all about diversification, de-risking, and investing at scale. So let's talk about the de-risking part and guaranteed delivery. Every project that gets into our diversified financing carbon pools will go through a very thorough due diligence, risk analysis, and conservative prediction analysis. We have XB0D on our company. It's B0 is one of the world's leading carbon credit rating agencies. And these people have more than half a decade of carbon prediction modeling experience. And now we're providing investors with this data free of charge as a public good. All the methodologies, how we analyze these projects, and every project that's on our platform will be made open source, and it's fully public area analysis to build long-term institutional investor trust. The suppliers, on the other hand, thanks to our protocol, what we're creating right now is a transparent price. A lot of people underappreciate how important price is. So right now, the entire carbon forward finance investment economy, as I mentioned, is done behind closed doors, over the counter, or OTC as a shorthand. Nobody knows what the prices are. You cannot find these prices publicly. We're creating public price. We want to bring all this information to the public so it will be transparent and it will de-risk the investors as well. So what we're creating for the suppliers is that they can every single second see what's the price of their project. If they like the price, they can click a button and sell their forward credits. And this is incredibly powerful. This is like NASDAQ, but for carbon investments. We also pay interest for our liquidity providers who help to make all of this work while they're holding this carbon exposure. And our long-term plan is what we really built is a general purpose supply chain finance protocol. It means that this protocol can be used not only in carbon markets, but also in other industries where you have forward financing issues. So climate currently has a massive gap by 2050 to fund all the projects. Carbon. Some researchers show it's around $4 trillion needed by 2050 to create the carbon projects we need to sequester our footprint. But we won't stay only in climate with the protocol. We'll go cross industry to other renewable energy, water, circular economy, and eventually into regulated commodities. We aim to become the central liquidity source for all these forward investments. All the marketplaces can build on us to access this liquidity. And you can build derivatives on us, like options and futures. We're in talks with many players about that. So yeah, in summary, what we do is that we are bringing modern financing to the carbon markets, essentially like bringing 1500 bartering economy and uplifting it to 21st century modern finances. And this is all to enable ESG investing at scale. Google, Microsoft, Stripe, Shell, they're all investing into carbon projects directly, instead of just buying offsets and retiring them. The reason they invest in them at an early stage is because they don't want to take a loss on their balance sheet. Right now, if any of the corporates buy the offsets and retire them to become net zero, they just have to show a loss on their balance sheet. I'm in talks with a lot of folk on the Google and Microsoft and other companies. When they invest in a project, that project is starting to earn profits because carbon prices are going up. And they can basically become their own clients and offset their footprint without having to take a loss on their balance sheet. This is good for debt. This is good for raising capital. And what I heard from one Google's representative was that we're essentially doing what they're doing, but we enable it for everybody at scale. So we enable diversified carbon investments for all the corporates and institutions at scale. We're backed by tier 1 VCs like Greycroft and Tave Plus 10, which are billion-dollar funds. German fund is a Possible Ventures, really good one, and many other very reputable VCs and angels. We also have very deep industry connections. We're partnered up with Stars CB, which is one of the world's biggest carbon trading houses, Toucan, which is the world's most successful on-chain carbon pool, SAS Global, which uses AI to predict the climate disasters and events, Linder, one of the biggest mangrove investors, and so on and so forth. And currently, we are raising for our carbon financing pools. We have 11 million committed. We have a target of 11 million to kickstart them, and we have around half of that committed already. So I hope you enjoyed this talk and it was informative for you for carbon markets. I'm excited to get into any questions and see how else I can help you understand the markets, the industry, and what we do better.
Right. ありがとうございます。Thank you, Stenver. So, 鈴木さん。
Thank you very much for very informative and also very magnificent story. And here, this is Suzuki from Japan Blockchain Association. And let's move on to the question and answer sessions. And first of all, we want to know about Solid World itself. My first question is that, how did you come up with your with the company name Solid World? What are your expectations with this name?
Yeah, so the story basically is that we started Solid World last year around October. That's when we went full time. And it was also, you know, the bull market, the height of bull market. The crypto markets were insane. There were metaverses, NFTs, all this stuff happening every day. And we were like, you know, all this stuff is cool. It's like hyper digital world, but we have this one solid world to actually save. And then we named ourselves Solid World to like tell that, hey, let's save our actual solid world as well. It did have another message in it as well, which is basically that how can we wanted to stress, since our clients are mainly corporates and institutions, we wanted to stress that this is, really solid and certain, de-risked, diversified, and all these messages as well.
Thank you. So you expect blockchain or token technology can eliminate ambiguity or uncertainty in whole life cycle of carbon projects.
Yeah, absolutely.
Thank you. The second question is that could you please introduce the types of projects which can access SolidWorld platform to get funded in the future?
Yes. So essentially, we will release our pools next year around March. The first pool we will do is growing mangroves. The second one will be afforestation, reforestation. And after that, we'll go wherever the carbon trading houses tell us the demand is. We don't see ourselves as somebody that creates new markets. We see ourselves as somebody who brings advanced financial instruments to existing mature markets. So we have already been talking with carbon traders about cook stoves, RED+, but also about high-tech removals. And after we've done with the forward carbon markets, we'll move to other industries for regulated commodities, clean water, plastics, and so on and so forth.
So SolidWorld is very open to various projects or various industries.
Absolutely. It ultimately depends on the carbon traders. They know where the markets are. They know what's actually interesting for investing. And they have already told us about a lot of different options they want to see happening because we're making their lives easier, basically.
Thank you. And next question is, we want to know how the advantages of SolidWorld continue in the future. For example, many financial institutions will expand sustainable finance, and this trend may become competitors to your company. The financial institutions could be competitors to your business. So do you see traditional financial institutions as competitors or partners?
Yes, it's a very good question. Currently, we see them as partners because they are looking for ways how to invest in these projects, but it's very hard for them. It's not their core business. And we offer them a diversified, de-risked way to do it. And direct sourcing for them, it's hard. They need to really build entire teams, entire departments. We enable them doing that so they don't have to build entireties. We fix their issues at scale. And our long-term competitive advantage is going to be deep liquidity. It's very hard to compete with liquidity because liquid markets are, they're not something you can just copy. It's real assets and value over there. So you're right that it is a race. If we're too slow, if we wait here for years, then they will start figuring this out as well. But right now we're faster and we can get ahead of them, and then it's easier for them to partner with us.
Thank you. And this is the exact point that I was most impressed. That is, it is ideal type of ecosystem that both startups and existing institutions are mutually beneficial and leveraged by a cutting-edge technology. That is very impressive point.
I agree. Thank you.
Good. And we hear you are talking with a lot of big global corporates, and what sort of edge are you offering to them?
Yeah. So I already mentioned it a bit in the presentation as well, but like most corporates, when they start thinking of carbon offsetting and net zero, they start thinking of buying certified carbon credits and simply offsetting them and taking a loss on their balance sheet. At one point, they start thinking like, that's not good for our balance sheet, especially now that we're in a bear market. And then they start thinking, how can we make this more cost efficient? So right now, they all basically start building these sustainability departments while we offer them a way, hey, why don't you just invest directly in diversified way, and you don't have to start looking for projects and becoming basically carbon VCs or investors, and that resonates with a lot of them.
Thank you. To reach that goal, SolidWorld takes a lot of effort in the project due diligence. I think this is inevitable to ensure the transparency. But on the other hand, it requires much cost for monitoring or surveillance or like that. So how do you keep a balance between cost and credibility?
Yeah, what's important to note is that we don't have to actively monitor the projects because we work with institutional suppliers who have a very good reputation. They go through our KYC and financial, due diligence, and we basically know that they're able to bring replacement credits or they must use insurance. So we don't have to bear any ongoing active monitoring costs because we're essentially senior pool. Every credit is already guaranteed delivery, and they are taking the junior positions. If the underlying fails, they need to provide replacements. So they're more interested in the active monitoring. So we're more like passive due diligence. We do it once, and then we check every now and then. And this is done by B0D. B0 is the world's leading carbon credit rating agency. These people really know their stuff. They have a lot of, half a decade of experience in that field. And they provide a very thorough analysis to first these institutional suppliers, but also our institutional investors, where we cover legal, finance, carbon yield risk, climate disasters, team risks. And everywhere we can, we use as much automation as possible. So for example, climate risk and climate weather disaster events, we use SAS Global, which uses AI to predict the climate disasters. They're very good partners of ours. If you have any climate related things you need to monitor, I do recommend them.
Thank you. We highly understand that your fantastic business can be realized not only with technology, but also good partnering or business model or good talent. Thank you. And
absolutely. We believe that everybody should focus on what they're doing the best, laser focus on their core strengths, do this the world's best, make sure nobody can compete there, and then partner with everybody else to handle all the other things around them, because somebody else is best at something else.
Thank you. Very, very impressive. And I'd like to continue my questions, but we should pick up the questions from the audience. I would like to hand over to Fujii-san.
Okay. So before taking questions from the floor, I have another question. It's investor role. So you explained that investor plays a very important role in the on-chain carbon market, right? But however, as long as I understand that there's not much understanding of what investors bring to the ESG world. So what specific role the investors play in ReFi market?
Yes, very good question. Investors play very important role in the ESG world. In fact, the entire reason why we have ESG world is largely thanks to investors. So it all started around 2000 something when BlackRock, one of the world's biggest investment funds, announced that they will only invest in carbon projects that are ESG aligned, because they saw the stats. They saw that if we keep continuing on our path, their investment bags are going to suffer. They're one of the world's biggest asset holders, and they see 80% of S&P 1,200 companies will suffer from climate disaster. That's their business getting destroyed. And they said, we will now only invest in companies which take climate seriously. And it started spreading like wildfire from there. And by now, 49% of US investors by PricewaterhouseCoopers survey say that they will actively divest from companies which are not ESG aligned. So what we see here is actually investors, private sector, have created the most capitalistic way possible to preserve environment. I personally think that's very beautiful. It's like the world's biggest and first experiment where we try to preserve the environment without government regulation. And that's very interesting, I think.
I see. Thank you. So we have several questions from floor, so I'll take these from the top. So first of all, question from Sarah-san. I'm going to read it. So is forward funding same as offtake contract? What would be the competitive advantage, difference between some players like Evergrow? So that's the first question.
Yeah, so it's a very good question. And first answer is yes, it's basically an offtake agreement. There's multiple names for it in the industry. It hasn't really been standardized. So it's called offtake agreements. It's called forward investment. It's called forward contract. It's called pre-financing. There's a lot of different names. Unfortunately, there's nobody that has said, here's the words we're going to use. So people sort of need to navigate around that. As for competitive advantages, well, in case of Evergrow focuses on clean energy finance. So clean energy is completely different than voluntary carbon offsetting. There's something called RECs for that, renewable energy credits, which are not the same as voluntary carbon credits. So in case of Evergrow specifically, they're essentially different industry at this point. Once we go to RECs ourselves, then there will be more competition between us. But right now, we're not on the same band. As for all the others, we really need to get into specific when we compare with every other protocol. But in short, what our competitive advantage is right now is that we have very specific forward financing protocol that on the one hand provides investors with diversified pool of different carbon asset classes, and on the other hand creates market prices and brings liquidity to the market. I haven't seen any solution like that anywhere, and I've spoken with everybody in ReFi space who is publicly known to be out there. I do know that a lot of competitors are trying to copy us. So we have we're in semi-stealth mode. If you look up stuff about us online and try to find the specifics, you won't find them because we're very protective of our IP at this stage. Once we go release all the pools and stuff, then things will get more available for everybody to see. And in there, our long-term competitive advantage will be deep liquidity. So deep liquidity is very hard to compete with. You basically just got to have more money and better connections to compete with that. So we plan to aggressively create the deepest liquidity pools there are and then maintain our position.
Okay, thank you. So we need to keep our eyes on the solid world now. So let's take a second question from the floor. It's from the anonymous participant. It's Japanese, so let me translate. So it says that I'd like to hear about the challenges and difficulties you are currently experiencing in promoting ReFi, and what challenges you would like to take on as a company in the future.
Yeah, so my challenges for now and for the next decade will be to find more liquidity. That's basically our company's lifeblood, and we will perpetually will keep working on two things: protecting and improving our reputation and credibility, and using that to attract more liquidity. This challenge will never stop for us. It is our core KPI essentially, and everything will be built around that. On the technical side, we had challenges in the beginning when we hadn't designed that, but currently we have designed a protocol that's being tested by commodity traders, smart contract developers, bankers, and all these different financially savvy people, plus auditors. So the technical part currently for us is well on track, and we don't see any major challenges in there right now or coming up. One big challenge for us that definitely is right now, and I hope it will get solved within the next few years, is regulatory clarity. So we use PricewaterhouseCoopers to do all our legal stuff. We do everything by the book. We pay top of the market. We really don't see this as a place you can save cost on. And we have Estonian company. We have non-binding opinion from the government, from Financial Inspection and Anti-Money Laundering Bureau about what we are doing, that it's okay, it's not a currency, it's not a equity or security. We've been thinking of going to Switzerland, where you can get binding opinions from the government about same stuff. But ultimately, we are very much looking forward for positive and reasonable regulation in the space, because that will essentially help to open up more of the space, make everybody feel more secure, and reduce all the scams and stuff as well.
Okay, thank you for your answer. So let's take the third question here. From Nishimura-san, thank you for your talk. From my understanding, ReFi is a market where corporates would be involved. Is there any possible ways or kind of project that individuals can get involved or contribute to?
Oh, absolutely. There's a lot. We are focusing on corporate. That's basically our core business, because it's very specific to what we are doing. And since we are into massive scalable project pre-financing or offtake agreements, then we just see that the institutions are where the biggest money is, and we want to unlock the biggest capital towards these players to help to save the environment as fast as possible. It also resonates better with institutions because they understand carbon markets more than the average person. But having said that, there's lots and lots of other ReFi projects out there which are retail focused, which try to do something with the common folk or B2C, or are purely, people supporting either through philanthropy or through some trying out different monetary experiments and trying to do something good. The best place to look for these projects, if you want to support them, is to check out ReFi DAO, is to check out This Week in ReFi, which is a podcast my partner Al Willem or Res is running. Or check out Rel's channel. Rel is holding like a regenerative finance newsletter. Or follow Kevin Owoki on Twitter, who is doing podcasts and constantly talking about coordination, public goods, and other things, and all the projects associated around him. Gitcoin Grants is a very good example where people are contributing to specific projects they like.
All right. Thank you. So we have another question here. It's a little longer. So I'll read it in English. How far do you plan to scale up your solution? Can Solid World DAO become an integral part of the overall carbon offset market in Japan? So the Tokyo market, one of the 3 largest markets in the world, launched its carbon offset market in last September. But so far, awareness has been low and has not attracted much public interest. So yesterday, the Minister of Economy, Trade and Industry finally visited the market. What can Solid World DAO offer to revitalize the market?
Yeah. So
can you handle this?
Thank you. Thank you for the question. It's a good one. We aim to become big. We aim to become basically the central liquidity of all forward financing in carbon markets, and then start taking rest of the industries. That's our objective. That's what we're working towards, and we want to be the biggest ones there are. We want everybody in the future to build on top of us and make their lives easier, because they will have access to instant liquidity or instant supply. When it comes to that specific carbon marketplace you mentioned, I haven't heard of that, so I can't talk about that specifically. But what we can do for Japan specifically is that we will keep talking with Japanese corporates. We will keep offering them solutions so they can invest into climate at scale. I'm also here talking and hope that this will inspire somebody to take action and start new companies in Japan to save the climate and do ReFi projects. And ultimately, I believe that interest will come from corporates and investors, just the way as it has in Europe and US. And like we will just make it easier and more accessible from them. Once, you know, some big corporate, like let's say Mitsubishi Bank, decides that they are now going deep into carbon markets, others will take notice. And, you know, it's not my place to talk about what their exact plans is, but I do know they are very much looking into it. And Microsoft already, as we know, has taken very inspiring steps towards that, and is working with others to inspire them as well to move towards more active role in the carbon markets.
Okay, thank you, Stenver. So the time is coming, so we'd like to move on to the wrap-up part. So, Mizuki-san, do you have any comments for the final question or?
So finally, let me ask just one quick question. Please give us some advice for Japan market or Japan society as a whole, because as you have mentioned, Japan has much more, has a lot of challenges for the sustainable society. So I would like to hear your advice for Japan market or Japan business or society.
Yeah, absolutely. If you want to start a carbon project, if you want to protect the forest or reforestate some land in Japan, or grow coral reefs or do anything like that, and you're having a hard time figuring out how to start with that, then just reach out to me. I can give you a curated list of consultants who can help you set up projects in anywhere in the world, not only in Japan, anywhere. We're mostly thinking globally. And they know how to do this stuff. They're experts, they have proven track record, they know how to talk with registries, they know how to get you certified, and they can help you set up a project. So start there. And the other thing I suggest everybody to think about is focus on the demand. So if you're starting a ReFi or blockchain project, or you're trying to do your marketplace, or you're anything you do in carbon markets, you hear some players saying that there's not enough supply. And I already covered that bit, and it's partly true. But the fact remains that demand is the most important thing. Sales, sales, sales. Don't forget that. Try to find the corporates, convince the companies, corporates, everybody. Get the investors in, talk to the investors, show them the stats about investors in Europe, US, where they're moving. Get them to understand it's essentially their security budget for their future. And it's not actually that expensive if you compare the alternatives in a few years for them. So focus on demand, spread the word, and I think that's the most important part.
Thank you. I think I took great lessons tonight. Thank you so much. So we have closing remarks from Fuji-san. Thank you.
Yeah. So thank you, Stenver. That's the great final words. Thank you so much for taking the time, and we really looking forward to seeing how Solid World evolves in ReFi market. And I also like to have a continuous conversation with your company and also ReFi community in Europe around your company to foster the ReFi market in Japan.
Same. I'm looking forward to Japanese visit again. I really loved Japan. When I was there in September, I was there for 2 days, and already my wife told me we gotta move here, not to New York. So it's a very nice place to be and very, very friendly. I appreciate your hospitality and everything you've done.
Thank you. はい。ということで、今日のですね、セッションは、ソリッドワールド DAO のファウンダーのステンバーさんをお迎えしてお送りしました。こういう形でですね、ReFiの情報を、ブロックチェーン協会としても皆様にまた、機会を見てお届けしたいというふうに思っていますし、ちょっとですね、また、今後、ReFiに関する、研究会みたいなものをですね、ちょっと立ち上げをしたいなというふうに思っておりますので、またそのあたりもですね、アナウンスできる段階になったら、皆様の方にアナウンスしていきたいなというふうに思っております。So, Stenver, thank you again for joining us today. We look forward to seeing you again. We are closing this session.
Thank you.
Thank you.
Thank you.
じゃあ、終了いたします。どうもありがとうございました。
ありがとうございました。
ありがとうございました。